success of an entrepreneur.
We've raised the bar.
Learn firsthand from successful business owners and create your own path to success.
I'm going to show you how great I am.
It's time to hit the road to growth with team lead of the Enriquez Group, Realtor Vinny.
Hi, you Road to Growth listeners. Today I have Brent Freeman. He is the founder and president of Stealth Venture Labs. I mean, I guess the easiest way to talk about it is a growth partner. But in your words, in a more, I guess, in-depth, what's your elevator pitch for yourself and your company?
Yeah, we are a growth marketing firm. We help incubate, accelerate, and grow brands, direct-to-consumer brands. And we do that in all sorts of fashions, from investing capital to investing resources to help them in that 0 to 1 phase, to starting our own, to bringing teams to high growth brands like Home Chef, Factor 75, HelloFresh, Crocs, those big branded names that you've heard of, all some of our client roster and portfolio, all the way down to brands you never heard, to help them kind of grow through growth plateaus.
The aspect of your guys' business with the resource partner aspect of that, and that model, is something newer that I've heard, I think, more and more over the last, 6 months, year. How new is that in the business, or has that always been around and just basically maybe not publicized as much?
So we've been the cobbler that has no shoes. Our marketing has been just referral based and network based ourselves, and up until recently. And so we've been around. This company's been around for 8 years. It's called a venture studio, basically. Venture studios help come up with ideas from scratch and bring them to market, or accelerate others. And from the beginning, 8 years ago, when I started this, it was all about being a full stack growth partner as kind of like a co-founder, having a shared service engine that helped people with good ideas or good supply chain connections be able to come to market, find product market fit, and scale and grow without having to build their own in-house marketing engine. Because I had come from the venture capital side, the angel investment side, and then had run my own brands. The thing that was needed was this kind of like center of the wagon wheel, right? That was a growth engine. And so for the first 5 years of this brand of Stealth, we actually were co-founders of brands. And we would come in and we would sometimes put capital, but a lot of it was just sweat equity. And we'd earn, and we had about 10 brands that we helped co-found.
So it's been when you were working with the other companies as a venture capitalist, was the resource aspect of it as prevalent as it is in this market today, or is this something that you feel you've kind of been one of the pioneers, I guess?
We were very early in this. They call it resources beyond capital. You have traditional venture capital and angel investing where you put money to work and then the entrepreneur executes, and then you kind of sit on the sideline. Maybe you have some governance, maybe you don't. What we found is that when we started this, is that the partners that we worked with needed more than just money. Yeah, they needed capital to operate the business, but they needed skill set, know-how, and people who could move fast, kind of like a SWAT team, or a SEAL Team 6, if you will, but for marketing. And so we were one of the early organizations doing this. There's in that time, there's been a huge boom in people coming in and saying, we're going to do some work for like a cash and equity hybrid. What I've found over the last 8 years operating is the following, is that if you're going to invest, it is better to invest capital because you're on the cap table in a different manner than you are as like a co-founder, right? Or as even like a service provider. And if you're going to grow a brand and figure out a unit economics model of how you would get paid to do that. These days, we rarely do the hybrid. It is not impossible, but we are either deploying capital into investments as cash on the cap table, or we are kind of starting our own brands in-house. Every year to 2 years, we spin up one of our own brands. And so it's a little bit difficult to be really truly in the center of that unless you're very, very early stage and you can help a brand right around $1 million to $2.5 million in revenue and recurring revenue is when a brand starts to need to build their resources in-house that we were providing. And then that creates an inherent tension oftentimes between the service providing, what's best for the brand, and conflict of interest. And so what we found through trial and error was that when we come and we help establish brands as a partner in early stage, we want to deploy capital to be on the cap table. And then if we're going to figure out a way where we can be a service provider to help them grow and scale too, that's also a separate deal. And so it's just been an evolution of figuring out the good, the bad, the ugly of kind of the hybrid investment service model.
Well, let's rewind, Brent. Going back to a young Brent, I mean, were you entrepreneur? Were you kind of more a business savvy? Were you just a go-getter? Who was the young Brent?
So I wasn't the guy that had the lemonade stand. And I remember when I went through, I actually went to University of Southern California, to USC. I was in the entrepreneur program there, right? So I'm SoCal down, not quite your hood, but near enough in that area. And I wasn't one of the rich spoiled kids, right? That goes to USC. I was kind of hustling my way through college, waiting tables, taking out student loans. And I remember the early days of the entrepreneur program, a professor who I love and respect, but disagreed with what he said, was that entrepreneurs are born, not made. And I just fundamentally disagree with that. I think that entrepreneurs are made. Some people find their entrepreneurial spirit earlier than others. And those are the people that find it in the lemonade stand, in the lawn mowing business, in the babysitting business. And you see that now, far back as I come, it just wasn't me. So young Brent was very focused on maximizing his days to live a life of passion. And that's because my mom died when I was just about 7 years old, my biological mother, and I was taught from a very early age that every day is a gift. And when you're young, you can't make sense of the world and why that stuff happens. And so what I processed and realized early on is that like this was a gift to me, in quotes, to allow me to live my life to the fullest. And so it wasn't about money. It was always about freedom and exploration and experience. And the thing that hit me the hardest as a kid in terms of what I wanted to do in life is like, I didn't want to start a business or be a millionaire or do any of that kind of stuff. It was the only thing that I was really passionate about was going to Italy, meeting my Italian relatives. Mom's side of the family was Italian, and learning to speak the language. I didn't grow up speaking the language. And it just, maybe it's the Italian culture. Maybe it was the connection to my mom who had passed. Maybe it was just the frequency of all of that just kind of like fit with me. And it was just the right, vibe or whatever. But that's the only thing I was passionate about wanting to go and do. And then my junior year in college, through a series of kind of crazy events, I ended up living in Florence. I'd never been to Italy, had taken only a couple semesters of Italian, and went and discovered a whole world that changed my life forever.
Well, let's talk about changing your life. So you get to Florence, you have that passion, and you're kind of focusing over there. How does that experience change you?
So I had gone through a kind of a tumultuous episode in the semester prior through an on-campus organization where there was like some scandalous stuff and some like ballot stuffing in an election, and I was on the wrong end. It was just crazy, and I was really disheartened by what happened, and it caused me to reevaluate. I was going down a path that I thought was, that I was told, I should go, and I should be on this leadership board, and then it didn't work out for me, and I was destroyed, candidly. And I took a step back, and this has been a theme in my life. I took a step back and I reevaluated, and I said, okay, I didn't know it at the time, but the market, right, was telling me something, and I get an opportunity to then react. And so I recentered on what brought me joy, and had gotten away from the Italy stuff. I was taking Italian classes, but I had no intention of studying abroad. The next day I went to the study abroad office, and I was like, I'm going to go do me. I'm going to focus on what makes me happy and brings me joy. And like 4 weeks later, I was living in Italy, and it was, I went not knowing anybody or having any relative. I had relatives there, but I only had a letter from 1970 and I didn't know them. And so I just went not having a single friend, anything to a program, and just immersed myself, lived with a family, got out of my comfort zone, and started to just follow blindly a little bit the passion that I had. And I knew I was in the right place. And in that study abroad program, USC did their study abroad through the Syracuse University. So it was a joint program. There was a professor and there was an intro to entrepreneurship course. And that was my first entrepreneurship course. And that Professor Anselmi, who I've since reconnected with, he sparked a revolution in my mind around what entrepreneurship can be and how it is a way to create a world that you have a vision of, whether you be Howard Schultz of starting Starbucks, or whether you be, Seth Godin, who wrote this book that I read at the time that was groundbreaking, that's now like way outdated, called The Purple Cow. I got really, really, really inspired by this idea that now that I achieved my lifelong vision of going to Italy, I started to learn the language, and I went out to Sardinia and met my family. Like, it was wild, found my roots and went to the little village where my great grandfather was from. And I came out of that whole experience being like, wow, I'm 21 years old at that time. I've just achieved my lifelong dream. What's next? And that's where the entrepreneurial spirit sparked. And I said, man, I'm not a corporate guy. I'm not built to be just behind a desk. I'm not built to just get into the grind. I'm not motivated by money per se. I'm motivated by creating a world that I believe should be created. And that's kind of what started me on my path. And I came back to USC and I got really involved with the entrepreneur program and the entrepreneur club, and just dominoed. And here we are 15 years later almost. And I've started and co-founded, 15 businesses.
Well, let's talk about those
Most
dominoes.
of which failed, by the way. So
okay. Well, let's talk about those dominoes. So you're in school, right? You're learning about entrepreneurship, and there's a difference between basically learning it and doing it.
Yeah.
Right. So what is that actual push to actually push what you picked up there and take the jump into starting a business?
So back in, so I was in the entrepreneur program at USC in undergrad in 2006, 7 and 8, kind of 7 and 8. And it was still very much the traditional curriculum of, we're going to teach you how to business plan. We're going to teach you how to write a pro forma. We're going to teach you how to do a pitch on stage. And you got to kind of run, like, physically print a document. And, and so what that did is that taught me the theoretical execution of entrepreneurial business, of taking an idea, putting it down on paper, doing a feasibility study, getting some market research, understanding, does it work on, in a pro forma, and then pitching investors, and then blah. And that's all fine and dandy. But I would say of the entrepreneurial world, the difference between school and theory and executing is that you have business ideas and then you have market realities. And that's where real businesses are made. Is that the business idea of what you put down on paper and what you see and what your vision is only a vision. And then when you get to market, you have an opportunity to listen to the market and adapt and evolve accordingly. And that's a lesson that I have had to learn the hard way over the course of years. I've had many different failures, both in my own execution and business partners' executions and market, that we've chosen. I've had many successes too, right? And the reality between theory, business planning, or ideation, or concept creation, and then execution, the delta between those two is really where a lot of people get stopped, and they say, "Oh, my idea didn't work," and they give up on it. Rather than taking, I have an idea, I think the world could be like this. There's a problem, I'm going to solve it. Let me come to market. It's not going to work like I think it's going to. Right? 1% of concepts work when they come to market. I'm going to get punched in the face, and then I'm going to adapt. And I'm going to get punched in the face again. I'm going to continue to adapt. I'm going to continue to adapt because I see the world differently than others, and I believe that we can get there. And so those two things between ideas and market realities, business ideas and market realities, I think is the real difference between people who succeed and fail, or maybe give up after coming to market and it's not working.
Well, let's talk about that. I mean, it sounds like there's a lot of learning that happened after you left school. I mean, can you walk us through a couple of examples or an example?
Man, yeah. So my first business, like actual business, well, I launched a consultancy in college, and we had a theory that if we went around to the local nightlife places in downtown LA, this was before downtown LA was being really redeveloped. We said, there's a big market in the USC market, which is also downtown LA, or just kind of adjacent. And I said, what if we went to these nightclub or business owners or restaurant owners, and we said, hey, we're going to promote a college night, and here's how we do it. And we put together this whole thing we called the Lounge Doctors, and we wrote up these. We had people who were interested and they wanted to pay us for it. We put together the big proposals, and we wrote these big proposals, and we gave it to them. We literally gave them the plan. We didn't charge them for it. We thought that they would, and so then we didn't get any paying customers because we gave them the product, and that failed before it got off the ground. I was like, okay, that's interesting. You got to do it, so that was one learning. And then about a year after that, right as I was graduating, a friend of mine had just come out of a summer job with his uncle, who was doing import-export of construction goods into Dubai for a big construction boom that was happening in the marina at the time. It's 2007, 2008. And we said, this is interesting. Tell us more, because he had worked for one summer and sourced some lumber from the United States and shipped it over there. And he made $100,000 profit. I was like, wow, I'm graduating with $200,000 in student loan debt or more. Tell me more. This is interesting. And I got away kind of a little bit from my North Star, and I chased the money because I was graduating with so much debt. And I got kind of caught up in all my friends taking banker jobs and this kind of stuff. I was like, let's go. And so we started a commodities import-export business in Dubai and LA, 22 years old. The hell did I know? And we spent 2 years trying to build that. And we did. We grew it. We closed a $10 million deal. And on paper, I'm a millionaire. And I remember waking up the next morning after closing this huge deal, thinking I would feel the same fulfillment that I felt when I went to Italy in college, of like that lifelong dream. And I was actually more empty than I was the day before after closing the deal. And it was this aha moment for me that my North Star isn't money. Money brings happiness to a certain point. You need to have enough to pay the bills. But for me, money is about freedom and creating freedom and experiences to live life, not a means to an end. And so that business was predicated solely on demand and credit and in construction and all that stuff. And then in the global financial crisis, right as when we started it, that hit Dubai super hard. And that business went out of business real fast. And what was millions became tens of thousands of dollars on paper. And then I walked like $50,000 and shut that business down. And my learning from that was that following just the money wasn't going to ever bring me the satisfaction and the happiness, and that I needed to have something built into the business model that kept me going. And then my next business was an online marketplace. I was determined to do something that was kind of evergreen in the internet world rather than in commodities. I didn't want to be in that world because all the guys that had made it and were super successful were just some of the most miserable, terrible humans I'd ever met. I didn't want to be like them. And so I looked at the business models that I did like. And I had met the founder of Tom Shoes when I was in college. And I loved that model of building in social good into the DNA of your business. And so I came up with an idea for like an Etsy, but for brands that give back. And so we launched a company called Roost in about 2010. And the vision was to be the largest marketplace aggregator of socially good brands. And we did that. We were on, Forbes Name You Need to Know, Mashable, Today Show, you name it. We got all the accolades, except we took our eye off the ball. We had a vision of the world. This is where I learned that lesson I told you a moment ago. Then we had market realities, and I didn't listen to what the market was saying. I had a stubborn vision of this is what we raise money to do. We're going to go do it. We're going to go do it. We're going to do it. And the market all along was like, yo, there's something over here in this vertical. You should pay attention to that. This is where 90% of your sales are coming from yoga apparel and whatnot. And I said, no, we have 1,000 brands. I can't pay attention to the 10 that are selling and blah, 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 blah. And what ended up happening is when we ran out of money, we couldn't raise the next round of financing because the market went soft when we opened our A round. We had term sheets and all of that. And then our biggest competitor collapsed, and that took a lot of the other marketplaces with it. And I one day just ran out of money. I had to lay off 26 people in one day, 9 hours of layoffs, cutting checks, terrible. I spent a year automating that business, paying back the debts, and just kind of had a soft landing. We sold it, but sold it for parts. And I learned a lot because in that organization, we were one of the first advertisers on Facebook when they launched their ad platform. And from the operator seat, I got to see how people, how you could build growth engines that could be effective. We were very good at marketing. We just had a bad business model. We had terrible margins, no recurring revenue. And it was solely based upon investment dollars. And so when that business ended up failing, it wasn't because, and I didn't listen to the market. Oh, by the way, I didn't listen to the market to say pivot into yoga, right? And so when that business failed, I wasn't ready to go get a job. I wasn't ready to go back into the world. I wasn't ready to say, this is, what knocked me out. And so I started, I said, what do I have? What did I learn? I went up to Big Bear for the weekend and, in the mountains of San Bernardino, and locked myself in a cabin with my dog and shut off my phone and poured over all the data. And, had my catharsis moment. And out of it, I found common denominators of all the brands that had amazing sell-through. And I extracted a bunch of learnings. I should have listened to the market. These things were missing. I needed to do X, Y, and Z. And what was working was marketing. And we had a good engine. And that's how my current company, Stealth Venture Labs, was born. I spun it out. I became an entrepreneur in residence at a venture fund in LA called Crosscut. helped them with their venture-backed companies kind of build some engines from the inside out, because I was an operator, not a service provider. And then I said, hey, I'm gonna do this, and so I built a team, and we started co-founding brands in 2014, and for about 4 or 5 years, we were co-founders of about 10 different primarily subscription focused consumer brands, with various successes and failures. About 4 of those are still around and operating and doing really well, and in the 8-figure run rate. And then Stealth Venture Labs now has become a 3-division organization: a growth lab, which is our marketing agency for big brands and small alike, like HelloFresh is our biggest client, and Mudwater and Crocs and Factor 75, a lot of meal focused items in there. We have Founder Lab, which is an incubator, an accelerator. We help brands come to market. I worked with Kevin Hart, help him with this superfood brand called Vita Hustle. And we have some other big clients in there. And this is 0 to 1. How do you take an idea and come to market and build it? And then we have our Impact Lab, which is our social good arm. And we have a nonprofit that teaches all of that stuff to inner city kids here in the United States, gives them $5,000 grants, funds them through an online program so that they can build their own e-com stores. So that's the full arc, man. There's a lot more in there, but that's the full arc.
Well, going back to, I guess, the beginning, more the end of the arc, or midway to the arc, when you're building the team out, right, for Stealth.
Yep.
And before that, you started a lot of different companies. Were you remembering names of people that you liked working with, yet it didn't work with that company? And then when you started building your team out, calling those people back, or what's that process like for you when, you find someone that has talent, but maybe that talent doesn't work for the company that you were trying to build at that time?
Yeah. So when I started Stealth, I had brought in a kid who had run my performance marketing division at my previous marketplace to help me be the guy that ran the media for the consulting business that became Stealth. And so, yes, I drew on that to say, hey, yeah, let's come with me. He had kind of stuck around and helped me with some of the wrap up stuff. And I said, great, let's go do this consulting business. And he was with us for a couple of years. And then we started a brand in-house that then we spun out, and he went to go operate that business with a group of people as well. And so, yes, initially I drew on one. And then as we kind of grew and added to the team and kind of rebuilt the team over different years, it was all about, your network is your net worth, right? And so I drew on my network and said, I'm looking for this type of a person. Put it out there to some friends, and then it was introductions and introductions, right? And then from that, those introductions led to other introductions of people who had worked with those folks in big fashion houses like Textile Fashion Group in Los Angeles, and others. And so, yeah, it did. The initial crew came kind of from the network and the network adjacent. And then as we've grown over the years, what we now have is we have a really wonderful, beautiful culture of amazing people who are high performers. And we are looking for other people that are not just in the network, not just that we've tapped on from the back, but that are excellent at what they do and a great culture fit. We just got voted Inc.'s 2022 Best Workplaces list yesterday, actually, it came out. And so we use the culture as a form of compensation to attract the best people that we can.
How often, and maybe not so today, but maybe earlier in Stealth, right, where you were helping a lot of new companies kind of grow from the start, how many times did you, because it sounds like it's really the avenue of having an idea, but needing kind of help, kind of putting the pieces together, and being that you were taking on so much talent onto your own business, how many people inside your business go, hey, I have another idea that might be separate from what we're doing here at Stealth. Is there a way that we can partner up on me building my own thing? Did that ever happen, or has that happened?
Yeah, definitely. And absolutely. And that was kind of the story that I told you previously. The brand that we started in-house that we spun out was in the yoga vertical. It's called Yoga Club. And the story behind that was I wanted to start something in yoga because the previous failure, all the sales were from the yoga vertical. And I was like, I got to do something with this knowledge. And we started a business there that became a $10 million plus run rate business. And then it spun out into its own entity and brought in investors. And then I was just a passive shareholder, right? It became its own operating thing. So that's a really good example. And I made a lot of mistakes in how we did that, and the corporate structure and how to gracefully transition team members and work with that without making your core service business be anemic. And so, I've made a lot of mistakes over the years, both in not just starting and founding ideas, but in having people who come to me say, I have an idea, I need help, I don't know how to get to the first customers, or, I have a supply chain competitive advantage, but I don't know how to position this to get to the next level. And that's where that hybrid model came in. And we didn't raise a fund or anything. It was just, hey, we're going to come in and we're going to find product market fit, and we're going to put the proof where the pudding is, and we're going to get going and earn our equity based upon performance. And that was great in some cases and very difficult in others, because depending upon the type of business that you do that with, if there's no path to liquidity or raising money or secondaries, that equity that you earn can be locked up with no line of sight of when that you're ever going to make your return on investment. You also, based on the type of company, can have different types of stock classes or scenarios in there. So there was a lot of landmines that we kind of navigated in that service model. All the way through to, we had some people where we earned equity who just stiffed us. They just didn't issue it. And they just, we grew them to a massive amount, and then they just ghosted. And you look at those people and you're like, wow, right? Like, I have a choice to go after them or to just move on and focus on this, even though you are legally right. And sometimes, this is part of entrepreneurship. You may be in the legal right on all of it. And then you're going to say, well, is it worth it? Right. And if it's not worth it, then you just say, well, I'm going to put my energies and efforts and focus on positively creating versus negatively chasing. And that's not true in all cases. Sometimes you got to stand your ground and you got to enforce. And we've done that too. But, it's interesting, these hybrid models early on of saying, how do you bring value in a way where everybody wins? And I think very early we learned the hard way how to lose on our end. So that now, as we look forward, when we are looking at companies, we deploy capital, because when you deploy capital, there's real teeth behind that, in terms of like structure, not even teeth, just precedent of like how that works, and buy equity, and what does that mean, and what are the shareholder rights and all that kind of stuff. And then the company gets money, to operate, which is also what they need. And then if we can help them grow on the service side, we do those deals kind of independently.
Over the 8 years, you guys have kind of expanded your model a little bit, of focusing more on helping companies grow from the next level. Where do you see yourself and your company going in the next 5 years?
So we're in the midst right now. So it's, for your listeners, whenever they listen, it's May 11, right? 2022. We are in the midst of a massive market shift. The COVID world is ending in quotes too, but changing, right? And people are traveling, the world's coming back, people are going back out to eat. There's less fear oriented around the COVID side of things. We're not in lockdown. iOS 14 and major privacy issues that have come out in terms of tracking and measuring people online. It's caused a big disruption. We're in the middle of a great resignation. People are out, now looking at other opportunities and saying, I'm no longer in fear. What do I really want to do? And so there's a lot of fluctuation. There's a war. The stock market is going crazy down, and right, like inflation's at an all-time high, interest rates at all, blah, 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 right? So you can substitute this for any winter season that happens in cyclical, economics at all. But we're definitely in it. And so when you say, what do we look at for the future? What we're actively looking at now is, how do we evolve and recenter our business around the pains of our customers? It's that simple. It's not that easy. And we have segmented our customers into enterprise versus SMB versus kind of our own projects, 0 to 1 phase stuff too. We say, what are the pains that maybe a year ago were very different that have now changed in this environment? Harder to acquire customer profitably. Facebook has no longer become a reliable platform for attribution on all of it. Channel marketing has now gone back to full stack marketing, which is where we started 8 years ago. And then it went very specific and narrow. Now it's opening back up. And so the future of our model is centered around the systemization and the processization of how we evolve, creating better systems to be able to react to the market environment that is volatile. So how do we shift? But when we manage anywhere between $10 and $20 million a month in media for our clients, on behalf of our clients. And when you're dealing with that much money running through the system, how you spend money, where you spend it efficiently, what, goes into it to assist it and help it, becomes very significant. Small changes can make big impact. And so what we're doing is we're evolving our business to make sure we're having the most impact for our clients and our team. And so we just rolled out some internal funding called the SVL, Stealth Venture Labs We Grow You Promise. And that We Grow You Promise is really just centered around how do we grow ourselves, our clients, our revenue, our profit, our joy, our impact, right? And our team members in their careers. Understanding that we can't, in this environment, people aren't going to necessarily be with us forever. It's not the days of our grandparents, working somewhere for 50 years. It's not the case, right? And so how do we create this as a stepping stone where we attract and retain the best talent and then help them get to the next phase of where they want to go, while simultaneously solving the pains of our clients? And so we're stitching together and threading together now our own plan to adapt to this evolving world. And it's going to look a lot similarly to like what we do, just more efficiently, more nimbly, and more tapped into making sure that we are solving the pains of our customers in this new world. So it's a long-winded way of saying like we're adapting. We're adapting to the environment. There isn't like a silver bullet answer. It's just recentering around making sure that we're bringing the most value and serving in the market.
So with regards to your employees, basically it's really opportunities, right? I mean, you're allowing them their bubble to grow as big as they want it to grow. Okay.
Yep. Yeah. So when you think about, we're a service business, and at its core, service businesses are operated by people, right? Processes then operated by people, and great people need to operate great processes. But it's naive as a founder to think that you're going to have somebody for 10 years in today's world. People want to start their own things. They want to move on and they want to grow. And that may not be, in this organization, or may not be possible. And so instead of, I'm talking about my staff and my team here, and also clients, I'll get to that in a second. Instead of trying to hold everybody in and enforce it, and then when people want to leave, you go, right? I'm saying, how do we do market judo and use the momentum as use the friction as momentum, and say, how do we say, let's embrace this, let's help people, and let's create a system that says, yeah, we know you're not going to want to necessarily be here forever, but let's put in the 2, 3, 4, 5 years that you want to here, right? And let's help you get to that next level, right? And so when you flip side of the coin of that into our clients, we know that a lot of our clients, a majority of them, would prefer to have an in-house marketing team. They either can't do it fast enough to hit their P&L goals if they're venture backed or big brand trying to hit growth, or they have an in-house team and they always need augmentation. So there's some of that, especially some of the bigger enterprise, or they can't afford it. Right, somewhere along the lines, there's some issue. They would prefer to have full time. And so what we're looking at is saying, how can we be open in that? We play a gap and we play a role, but we understand what you ultimately want. And instead of saying, we're going to do everything we can, a lot of people like build in hooks or things that like claw people in to stay. And I understand that from a retention, but for me, that's a fear-based tactic. I'm really approaching this business with a love and heart-centered based focus to say, I know short-term it might be a little difficult, but long-term, the right call is centered around how do we help our clients achieve their goals of the in-house organization, and how do we help our team also be able to achieve their dreams. And I believe my hypothesis is that long-term, this is going to pay off in spades.
Well, thank you, Brent, for being on the Roach Growth podcast. If someone's listening right now and they're looking to either join your team or they have a company that's growing and they need help, what's the best way of them getting more information?
Best way is our website, stealthventurelabs.com, stealthventurelabs.com. We're also on LinkedIn. They can also shoot me an email direct. It's just brent.freeman@stealthventurelabs.com. They can also, if they want to work with us, they can check us out on Glassdoor. We have a 5-star Glassdoor rating. We're happy to talk with anybody at any stage. And if we, the way we operate it is if we're not the right fit, we will help them try to figure out who is.
Well, again, thank you, Brent. I'm gonna finish off one last question. Do you think, or actually, let me ask this a different way. Where do you think you would be today if you never met that professor in Italy?
There, in everybody's lives, there's a handful of people that you, on one hand, can count of folks who change your trajectory. He was one of them, and he's not the only reason I'm sitting where I am today, but he is a big one. His inspiration and his mentorship and guidance unlocked something in me at the right time when I was ready to receive it. And so, I'm definitely an amalgamation of inputs like that. I had a high school football coach who then became my first investor, who gave me my first, right? So like I have a couple of these folks along the way, but without great mentors or people who believe in you, it really becomes a lot harder, an uphill battle, which is why anybody listening to this, even if you haven't quote unquote made it yet, I highly recommend looking at who you can mentor, who you can be that professor to, that coach to, whatever it is, to affect their trajectory, because you have no idea how that can change the world.
Totally agree. Yeah. If you guys are listening right now, I mean, maybe you don't have your passion yet. Maybe you don't know what you're going to do. I mean, be open. There's something that you know that someone else wishes they knew.
Yeah.
And there's someone out there that wants to help you out, get to where you want to get to. You just have to be open to it. I mean, come from abundance, not from scarcity. Thanks, you guys, for listening. Please subscribe, please share, and go in the show notes and find Brent. Bye, everyone.